Right now, you're making trading harder than it needs to be, and I can prove it. 95% of traders blow their accounts. They quit. They blame the market, the algorithms, everything except the real problem. Meanwhile, 5% find trading so obvious it's boring. Same markets, same opportunities, same 24 hours. The difference? The 95% are fighting a war they've already lost. The 5% are playing a game they've already won. Over the next few minutes, I'm going to walk you through the 5 traps destroying your account and the exact shifts that separate amateurs from professionals. And I need to start with something nobody else is telling you. Trading violates everything you learned about success. Think about it. In school, more studying equaled better grades. In most careers, more hours equals more output. In the gym, more reps equals more strength. The formula was always the same: more input, more output. Your entire life has trained you on this principle. Work harder, do more, push through. In trading, more analysis equals worse results. More information equals more confusion. More trades equals smaller accounts. More screen time equals more mistakes. This breaks your brain. Your entire operating system says work harder, do more, analyze deeper. But the market punishes this every single time. I've watched traders with PhDs from MIT struggle while high school dropouts succeed. I've seen people with 20 years of business experience blow account after account, while complete beginners find consistency in months. It's not about intelligence. It's not about work ethic. It's about whether you can unlearn what made you successful everywhere else in life. So you're not failing because you're stupid. You're failing because you're applying the wrong success model to trading. And once you understand that, everything else starts to make sense. But understanding alone won't save you. You need to know exactly what's sabotaging you. The first trap is what I call the certainty addiction. Your brain craves certainty like oxygen. Every other job gives you this. Show up, follow procedures, get paid Friday. Predictable, safe, comfortable. Even creative jobs have structure. Clients tell you what they want. Deadlines tell you when. Guidelines tell you how. Trading? Zero certainty. You can trade or not trade. Enter here or there. Hold for seconds or months. Every decision is yours. Every outcome is unknown. Your brain hates this. It wasn't designed for it. For millions of years, uncertainty meant danger. The rustle in the bushes could be wind or a predator. Your ancestors who assumed certainty survived. The ones who embraced uncertainty became lunch. So what does your brain do when faced with market uncertainty? It tries to create certainty where none exists. You add 47 indicators, convincing yourself that the right combination will tell you what happens next. You study more patterns. You search for the holy grail, the perfect system that never loses. You convince yourself that just one more piece of analysis will give you the clarity you need. I know a trader who had literally 19 indicators on his chart. 19. Stochastics, RSI, MACD, 3 different moving averages, Bollinger Bands, volume profile, market internals, and a dozen more. His screen looked like a Christmas tree. And you know what happened? He couldn't take a trade. Too many conflicting signals. The stochastic said, buy. The RSI said, sell. The moving averages were mixed. He'd sit there paralyzed, watching perfect setups pass by because he'd created too much certainty, which ironically created too much uncertainty. This is why trading feels impossible. You're trying to grab smoke. The harder you squeeze, the less you hold. You're fighting against the fundamental nature of the market, which is probabilistic, not deterministic. Here's the shift the 5% made. They accepted something that sounds simple, but feels impossible. You cannot predict what happens next, and you don't need to. You only need to execute your edge repeatedly, knowing sometimes you'll win, sometimes you'll lose. And that's not just okay, it's required. There is no system that wins every time, not one. If someone tells you otherwise, they're lying or delusional. Stop trying to predict. Start trying to react. The market will do what it does. Your job isn't to know what's next. Your job is to execute your plan when your setup appears. That's it. That's the entire game. But the certainty trap is just the beginning. The second trap is even more insidious. I call it the instant feedback loop. In most jobs, feedback is delayed. You work on a project for months before seeing results. You invest years before earning a degree. A farmer plants seeds in spring and harvests in fall. The gap between action and outcome gives you emotional distance. It gives you time to process, time to adjust, time to stay rational. In trading, you click buy. 5 seconds later, you're losing money. Your heart races. Your palms sweat. Your lizard brain starts screaming danger. The position goes more against you. Now you're down $100, $200, $500, all in the time it takes to drink a coffee. Your stress hormones spike. Your breathing gets shallow. Your rational brain goes offline and your emotional brain takes over. This instant feedback hijacks your decision-making in ways you don't even recognize. Every tick against you feels personal. Every small loss triggers survival instincts designed for actual physical threats, not financial fluctuations. Your body doesn't know the difference between losing money and being chased by a predator. It reacts the same way. So you start making emotional decisions disguised as logical ones. I'll just move my stop a little wider. The analysis is still valid. It just needs more room to breathe. That's not logic. That's your brain trying to avoid pain right now. I'll add to the position. I'll average down. It has to bounce eventually. That's not strategy. That's hope dressed up as conviction. The 95% trade in this emotional state constantly. They're in fight or flight mode, reacting to every price movement, making decision after decision from a place of stress and fear, and then they wonder why they can't stick to their plan. The 5% have trained themselves to view each trade as meaningless noise. One trade doesn't matter. 10 trades don't matter. What matters is executing the process correctly over hundreds of trades. They've created emotional distance from instant feedback, not by being emotionless, but by understanding that short-term results are random and long-term results are everything. Think about a casino. The casino knows that any individual hand of blackjack could go either way. They might lose 10 hands in a row to the same player. But do they panic? Do they change their rules? No, because they understand their edge plays out over thousands of hands. Traders need to think like the casino, not like the gambler. Here's how you do this. Stop checking your P&L during trades. Seriously, cover it up if you have to. Some platforms let you hide it. Use that feature. The only number that matters is whether you followed your rules. Did you wait for your setup? Did you size correctly? Did you exit where you planned? If yes, successful trade, even if you lost money, because you controlled what was controllable. I knew a trader who would literally put a sticky note over his P&L. He couldn't see if he was up or down. All he could see was his chart and his rules. His consistency improved dramatically within weeks. Why? Because he stopped making decisions based on pain and started making them based on process.
Now, the third trap is probably the one destroying you right now. I call it complexity addiction. Your brain is actively sabotaging your trading success. How? By making you crave complexity. Why? Because complexity feels like progress. Learning a new indicator feels productive. Reading another trading book feels like you're getting better. Watching analysis videos feels like preparation. But none of that is trading. That's consumption disguised as preparation. The market rewards execution, not education. It rewards boring repetition, not exciting exploration. It rewards doing the same simple thing over and over, which your brain interprets as stagnation. Your brain says, you've been doing the same thing for 3 months. You're not growing. You're not learning. You need something new. So you keep adding. Another strategy, another indicator, another market to watch, another time frame to analyze, another signal service to follow. Your trading gets more complex, not because it makes you more profitable, but because complexity satisfies your brain's need to feel like you're doing something. It feels like sophistication. It feels like mastery, but it's neither. I've met traders who trade stocks and Forex and crypto and futures and options all at the same time, who watch 5 time frames simultaneously, who have strategies for trending markets and ranging markets and volatile markets and quiet markets. Their desk looks like NASA mission control, and they're losing money, not because they're dumb, but because they're trying to process too much information in real time. Here's the truth. The 5% understand. Simplicity is not a weakness to overcome. It's a strength to embrace. Every time you think about adding something, ask yourself this. Will this make my execution clearer or more complicated? If it adds complexity, reject it. Doesn't matter how good it sounds. Doesn't matter how many people swear by it. If it complicates your execution, it will hurt your results. One strategy mastered beats 10 strategies dabbled. One time frame, one market. Simple entry rules, simple exit rules, simple risk management. I know a trader who only trades one setup. That's it. One pattern on one time frame and one market. He's looked at the same thing every day for 7 years, and he's consistently profitable. Not because he can't learn other setups, but because he knows that mastery comes from depth, not breadth. Complexity is not sophistication. It's confusion with a fancy outfit. The most profitable traders have the simplest systems, not because they can't handle complexity, but because they've learned that simplicity is what you can actually execute under pressure. When you're in a trade and it's going against you and your heart is racing and your hands are shaking, you don't want to be cross-referencing 7 indicators and checking 4 time frames and consulting 3 different strategies. You want one clear rule. Exit here. That's it. Remove 90% of what's on your charts right now. If that feels scary, that's proof you need to do it. That fear is your brain trying to maintain its security blanket of complexity. Let it go. Strip your system down to the absolute essentials. If you can't explain your entry, exit, and risk management in 3 sentences total, it's too complex. But here's where most traders really destroy themselves. The fourth trap is outcome obsession. You check your account balance 14 times a day. You calculate how much you're up or down this week. You compare yourself to other traders. You measure yourself by today's profit and loss. You feel like a genius when you're winning and a failure when you're losing. Your mood swings with your P&L. Your confidence rises and falls with your account balance. This is outcome obsession, and it's killing you. Because here's the truth. You control nothing about outcomes. You don't control whether news breaks that sends everything haywire. You don't control whether the market moves up or down. You don't control whether your perfectly valid setup works this time. You don't control whether today, this week, or this month is profitable. You control exactly one thing, whether you followed your rules. But that's not where you put your focus. You focus on outcomes, which are random in the short term. Then you make decisions based on those random outcomes. You have 3 winning trades, and suddenly you're taking bigger size because you're on fire. You have 3 losing trades, and you're reducing size or sitting out because you lost your touch. You're treating random variance as meaningful information about your abilities. The 95% measure success by money made today. The 5% measure success by rules followed today. This single shift changes everything because one is out of your control and the other is completely within it. Imagine 2 traders take the same trade. Both get stopped out for a loss. Trader 1 feels terrible. Another loss. Another day of being wrong. Another hit to his confidence. He starts questioning his system. Maybe he needs to change his entry. Maybe he needs different indicators. Maybe trading isn't for him. He's measuring himself by the outcome, which he couldn't control.
Trader 2 feels fine, maybe even satisfied. He saw his setup, executed his plan, managed his risk properly, and accepted the result. The market didn't cooperate this time. That's fine. It will next time or the time after. He's measuring himself by the process, which he completely controlled. Same trade, same outcome. Completely different psychological impact. One trader is spiraling, the other is stable. Create a new definition of a successful trading day. Not, did I make money, but did I execute my plan? Keep a simple checklist. Did I wait for my setup? Did I size correctly? Did I manage the trade according to my rules? Did I exit where I planned? If you can answer yes to these questions, mark the day as successful, even if you lost money, because you controlled what was controllable. And if you keep doing that, the money takes care of itself. This removes the emotional roller coaster. You're no longer at the mercy of random market fluctuations. You're grounded in process, which is stable, repeatable, and under your control. You can wake up tomorrow and execute your process again, regardless of what happened today. That's power. That's control. That's the foundation of consistency. And that brings me to the 5th trap. Information overload. You're subscribed to 7 trading newsletters. You follow 20 trading accounts on Twitter. You watch analysis videos every morning. You check financial news constantly. Bloomberg on one screen, Twitter on another, Discord trading groups pinging all day, Telegram notifications, YouTube alerts. You're consuming information all day, every day, and it's making you worse. Here's what nobody tells you about information in trading. Past a certain point, more information doesn't improve decisions. It paralyzes them. Every piece of information is someone's opinion. Every analysis is one interpretation. Every news headline is one angle. When you consume all of it, you're not getting clarity. You're getting noise. Your brain tries to synthesize all these conflicting inputs. One analyst you respect says the market is going higher, shows compelling charts, makes a strong case. Another analyst you also respect says the market is going lower, shows equally compelling charts, makes an equally strong case. Economic data is mixed. Some indicators suggest strength, others suggest weakness. Sentiment surveys are uncertain. You read 10 different opinions about the same price action, and now you're more confused than when you started. So you freeze. Analysis paralysis sets in. You miss the trade entirely because you couldn't decide, or you take it with no conviction and exit at the first sign of trouble because you're not sure it was the right trade anyway. Or worse, you take it, it goes against you. You check Twitter, see someone saying the opposite of your position, and you exit for a loss. Then it reverses and goes your direction. You just let someone else's opinion override your own analysis and cost you money. The 5% practice something I call strategic ignorance. They deliberately limit information. They have their system. They know what they're looking for. Everything else is noise they actively ignore. No financial news during trading hours. No analyst reports. No social media. No group chats. No opinion, consumption of any kind. Just their setup. When it appears, they execute. When it doesn't, they wait. Information can't confuse them because they don't consume it. This sounds extreme to the 95%. But what if I miss something important? What if there's news that affects my trade? What if everyone else knows something I don't? These questions reveal the addiction. You don't need to know everything. You need to know your setup.
That's it. Stop checking news during trading hours. Stop reading others' analysis. Stop consuming opinions. Your edge is in your system, not in reacting to everyone else's thoughts. This feels wrong at first, like you're missing something. You're not. You're gaining focus. And focus is far more valuable than information. I'd take a focused trader with limited information over a distracted trader with comprehensive information every single time.
So those are the 5 traps: certainty addiction, instant feedback loops, complexity addiction, outcome obsession, information overload. Now you understand why trading feels impossible. You're fighting against your own psychology, applying the wrong success models, and consuming everything except the one thing that matters: disciplined execution. But understanding doesn't change behavior. You need specific shifts. And the first shift might sound simple, but it's the foundation of everything else. Embrace uncertainty as your edge. Stop trying to predict. Start trying to react. The professionals don't say, "This will go up." They say, "This setup has a favorable probability based on my testing. I'll take the bet knowing I might lose." That subtle language shift reveals a massive psychological shift from prediction to probability, from certainty to acceptance. When you truly accept that you cannot and do not need to know what happens next, trading gets easier instantly because you stop wasting mental energy trying to control the uncontrollable. You stop second guessing. You stop freezing. You see your setup, you execute, you manage according to your rules, you accept the outcome. Simple. Not easy, but simple. This takes practice. Your brain will fight you on this. It wants to know. It wants certainty. Every trade will trigger that desire to predict. Is this one going to work? Should I take it or wait? These questions are traps. The better question is, does this match my setup? If yes, execute. If no, wait. That's the only question that matters. The more you can embrace the uncertainty, the clearer your decision-making becomes. You stop hesitating. You stop overthinking. You become mechanical in the best possible way. Robot-like execution with human oversight. That's the goal. The second shift is to simplify ruthlessly. Take everything on your charts right now. Remove 90% of it. One strategy mastered, one time frame, one market, or a small handful at most. Simple entry rules you can explain to a child. Simple exit rules that leave no room for interpretation. Simple risk management that you follow every single time. If your system can't be explained in 3 sentences, it's too complex. Try it right now. Can you explain your entry in 1 sentence? Your exit in 1 sentence? Your risk management in 1 sentence? If not, simplify until you can. I know what you're thinking, but what if I'm missing something? What if that extra indicator would have saved me from that loss? What if I need more confirmation? You're not missing anything. You're gaining clarity. Every piece you remove is one less thing to confuse you in the moment. The most profitable traders I know have the simplest systems, not because they can't handle complexity, but because simplicity is what you can actually execute under pressure. When you're in a trade and it's going against you and your heart is racing, you don't want to be processing 47 data points. You want one clear rule. Exit here. Done. Strip it down. Keep stripping. When you think you've simplified enough, simplify more. You'll know you're there when looking at your charts feels almost boring. When the decision-making feels obvious. That's clarity. That's execution-ready simplicity. The third shift might be the hardest one to accept. Develop patience as a strategy. The 5% spend most of their time doing nothing. Watching. Waiting. They're not bored. They're hunting. Predators don't chase every animal they see. They wait for the right moment, the perfect opportunity where success probability is highest. And when that moment appears, they strike with full conviction. The 95% are always doing something. Overtrading, forcing setups, creating opportunities that don't exist because sitting still feels like you're not working. In every other job, inactivity equals laziness. In trading, inactivity is often the most profitable action. I know a day trader who used to take 20 to 30 trades per day. Constant action, always in the market, always doing something. Monthly results? Barely break even, sometimes negative after commissions. Then he had a realization. Most of his profits came from 3 to 5 trades per month. Everything else was giving back his gains or adding to losses. So he changed his approach. He limited himself to 3 trades per day maximum. If his setup didn't appear, 0 trades. Some days he'd sit for 8 hours and do nothing. Just watch. His friends thought he was crazy. His family asked if he still had a job, but his results spoke for themselves. His win rate jumped from 42% to 61%. His monthly results went from break even to consistently positive. Same markets, same strategy. The only difference? He stopped forcing trades and started waiting for obvious opportunities. Trading isn't about being busy. It's about being selective.
The market will always offer another opportunity. Your capital and mental energy are finite. Preserve them for the moments that matter. This means you'll have days where you do nothing, where you watch the charts and your setup never appears. And you have to be okay with that. You have to understand that patience is not passive. It's active discipline. It's the willingness to wait for your edge instead of manufacturing trades to feel productive. Most traders need to cut their trade frequency by 75%. If you're taking 30 trades a week, cut it to 7. If you're taking 10 trades a day, cut it to 2. Force yourself to be more selective. Your win rate will improve. Your confidence will improve. Your account will improve. The fourth shift is about identity. Change how you see yourself. The 5% don't see themselves as profit chasers. They see themselves as rule executors. Their identity isn't tied to wins or losses. It's tied to discipline. This makes them psychologically bulletproof. A bad day doesn't shake them because they didn't fail at their identity. They executed their rules. The market just didn't cooperate this time. That's fine. It will tomorrow or next week or next month. Their self-worth isn't attached to today's outcome. A great day doesn't inflate them because they know it's not genius. It's the natural result of executing their edge repeatedly. Tomorrow, they'll do the same thing regardless of today's outcome. No ego inflation, no false confidence, just steady, consistent execution. This identity shift is subtle, but everything. When you stop being a trader who chases money and become a trader who executes rules, the money follows naturally because you're no longer operating from desperation or greed. You're operating from discipline and patience. You're no longer attached to any single outcome. You're focused on the process, which is the only thing you can control anyway. Think about your identity right now. When you think about yourself as a trader, what comes to mind? Be honest. If the answer involves money, profits, gains, or winning, you need to change it. Your identity needs to be, I am someone who follows my rules no matter what. That's it. That's the entire identity. Everything else is just noise.
And that brings me to the fifth and final shift. Make it boring. Here's what the 5% will never tell you in a dramatic video. Trading is boring. Really, really boring. You wait. You watch. Your setup doesn't appear, so you wait more. Hours pass. Still nothing. Maybe tomorrow. You watch. You execute when your setup appears. You manage the trade. You exit. You wait again. Hours of nothing interrupted by moments of focused execution. The 95% can't handle this. They need excitement. They need action. They need the dopamine hit of constant trading. They need to feel alive, engaged, stimulated. Trading becomes entertainment, not business. And entertainment costs money. The 5% have made peace with boredom. They understand that boredom is the price of consistency, and consistency is the price of wealth. They've trained themselves to find satisfaction in doing nothing until the right moment. They've learned to enjoy the hunt, not just the kill. If you're finding trading exciting, you're probably overtrading. If it feels like a roller coaster, you're probably trading emotionally. If every day is dramatic, you're probably not following a system. The path to making trading obvious is making it boring, systematic, repeatable, predictable in execution, even when outcomes vary. I want you to really sit with that for a moment. Boring? That's the goal. Not exciting, not thrilling, not dramatic. Boring. Because boring means you've removed emotion. Boring means you've simplified. Boring means you're executing the same proven process over and over. And boring is what makes you money. Think about successful businesses. Are they exciting every day? No. They do the same things repeatedly, same systems, same processes, same execution, day after day, week after week, year after year. That's how they build wealth. Trading is no different. You're building a system, not seeking adventure. Trading is only impossible when you fight what it actually is. When you try to make it something, it's not. When you demand certainty from uncertainty, complexity from simplicity, and excitement from patience. The 5% find it obvious because they've stopped fighting. They've accepted the game for what it is. A probability-based exercise in self-discipline where the edge comes not from knowing more, but from executing better. When trading stops being a dramatic battle and becomes a boring routine, when you stop asking, how do I predict the market, and start asking, did I follow my rules today? That's when impossible becomes obvious. That's when the fog clears. That's when you stop being your own worst enemy and become your own best ally. You have a choice to make. You can keep doing what the 95% do, adding more indicators, consuming more information, trading more frequently, making it more complicated, fighting harder, trying to force the market to give you what you want when you want it, staying on the emotional roller coaster, measuring yourself by outcomes you can't control. Or you can do what the 5% do. Simplify until it feels too simple.
Focus until everything else disappears. Execute your rules without question. Wait for genuine opportunities instead of forcing trades. Repeat the same boring process day after day. Measure yourself by what you can control. Embrace the uncertainty instead of fighting it. The market doesn't care which path you choose. It will keep offering opportunities regardless. It will keep moving up and down, creating patterns, providing setups. The question is, will you still be in the game when those opportunities appear? Or will you be another statistic in the 95% who found it impossible? Will you have any capital left? Will you have any confidence left? Or will you have blown another account and convinced yourself that trading doesn't work? The difference between impossible and obvious isn't talent. It's not luck. It's not capital. It's not secret knowledge or expensive courses or special software. It's simply whether you're willing to stop fighting and start flowing. Whether you're willing to kill the complexity that makes you feel smart but keeps you broke. Kill the need for certainty that keeps you paralyzed. Kill the outcome obsession that keeps you on an emotional roller coaster. Make it boring. Make it obvious. Make it profitable. That's the game. And now you know how to play it. The question is, will you actually play it, or will you go back to doing what feels comfortable, what feels productive, what your brain wants you to do? Because your brain will keep pulling you back to complexity, back to certainty seeking, back to outcome obsession. That's its job. It's trying to protect you using the only models it knows. Your job is to recognize when it's happening and course correct again and again, day after day, until the new way becomes automatic, until simple feels natural, until patience feels right, until boring feels good. That's when you've made it. That's when you've joined the 5%. That's when trading stops being impossible and becomes obvious.